Hi everyone and welcome back. This is Ryan bringing you another video today. Well, the reaction we was looking for up and around these wicks is perfect because yesterday in our video I think we'd just left this upper wick to the upside in these zones and we expected us to come in and get that filled, which as you can see we've done. We left that big wick to the upside, outlining probably another push to the upside, then come down and work these ranges in an ABC fashion, which is what I think we are getting. So whether it is an ABC fashion or whether we get a WXY or if it's something a little bit more complicated, it doesn't matter too much because the key zone that we was pointing out, 18,300 to 18,400, perfect test of this trend line to the upside as well. So really nice to see that we are getting the working of the ranges now. So in the short term, it won't surprise me if we do consolidate a little bit and perhaps even come back to the top of this range, and that would then give us, the head and shoulder pattern for us to then move down to the liquidity zone that we've been watching for quite a while. So I'll just show you what I was tweeting out yesterday so you can get an idea of what my idea was yesterday as we was spiking up in these moments to expect to move down. Here we are guys, just a tweet from yesterday, December the 14th, just working on the ranges and my best guess for what I could see happening where we get up to the 18,400 zone and then begin working these ranges and come down in this A wave, and that is exactly what we've got recently, as you can see on the chart. We came back down to around 17,400 and that's where we are now. So the B wave back to the upside, not unexpected, planned in advance and totally unemotional to what we are seeing in the market at the minute, because overall this is a bullish structure. We are looking for upside momentum after this liquidity down here is taken. So nothing to panic about in my opinion, but as I said yesterday, people was getting very excited up here with bullish CPI news, and I said the Fed could come in and give us some different news and then the market can reverse on a dime and everyone gets scared again. So let's jump back into the markets now, and we're just going to stay on the 4 hourly because it gives a better wave analysis on this lower time frame. And I think the main thing what we're trying to figure out is, how is this market moving up? Is it moving up correctively or is it moving up impulsively? And to be honest, both could be argued, because you might argue that we have just impulsed to the upside in a 1, 2, 3, 4, 5, and now we are just sort of getting an ABC correction back down to the liquidity zone, and that's a big 1, 2 to the upside, and then we are majorly bullish. Or we could even have a WXY to the upside with more WXYs to come, and then it just gets a little bit more complex, and either way we end up probably coming down to this liquidity zone anyway. So the zones we discussed yesterday, really key and really nice to see that this market was coming down from the 18,300 to 18,400 zone. So if anyone did benefit from them shorts there, really well done, because everyone was getting excited up here and it's hard to short in the excitement and it is also hard to long in the fear. So again, we are staying ahead of the market here, staying ahead of the narrative, and we have our ranges now, so we can see that if we do get a movement back to the upside, something like this comes in and tests this left wick here, we know we're setting up that inverse head and shoulder pattern for the move down to the liquidity zone. But again, that people will start getting very excited again up here, and then maybe we get that 5 wave move down in a C wave to then finish off the correction. And really that lines up with the RSI at the minute, because the RSI is looking like we have a bit more momentum to the downside, but on the lower time frames perhaps a bit of a pullback to the upside. So I have just dropped us down to the 1 hourly now, just so you can get an idea of the RSI at the minute, because we are getting back into oversold conditions, and that we would expect a bit of a rise in the market. And we don't have to pump to the upside and break these highs, but again, that would suggest perhaps a bit of a free wave move back to the upside, come in and take this liquidity before then continuing down, and maybe that would give us some bearish divergence at the top there for us to then come down, and let's say we get that 5 wave move, we come up in the RSI in this move here, come in the 5 wave move, and maybe that gives us some hidden bullish divergence down here where we set a higher high in price perhaps, but maybe a lower low in RSI. So that's just an idea at the minute in terms of RSI on the lower time frame. But if we just zoom out now to the weekly time frame, have a look at the monthly time frame as well, we can just keep an eye on the big picture, staying unemotional, just watching the key levels, and I think that's the best thing that we can do at the minute in the market. And on the weekly time frame, guys, perfect reaction, because as we mentioned yesterday, as the big candle was right up here and everyone was getting quite bullish and saying 20k next, we did outline that there's 5 days left, and now there's even just 3 days left on the candle. So if we do end up closing like this, it's going to get everyone very bearish again. But to me, this candle is a sign that the market is showing strength and we do want to move to the upside, but we might just not be ready yet for it. So imagine we close below this wick and everyone starts saying, uh-oh, here we go, we've retested the range, we're going lower, we're going lower. And all we do is end up going back to that liquidity zone and then continue the move to the upside. It really is the way the market makers work. This is the way the market works. So if you are finding yourself getting FOMO at the top of the big green candles or getting fever at the bottom of the big red candles, work it out. This is why the market is doing what it's doing. It's making you feel a certain way. But as you can see here, just having a look at the RSI on the weekly time frame, major bullish divergence. So, I don't think this little pump to the upside is the bullish divergence playing out. I think we have a much bigger move to the upside coming, but we just need to be patient. And that's why I made the video the other day, Bitcoin, the waiting game, and we came up to a perfect zone, trend line retest, reacted from it, and now everyone's getting really bearish again with the inflation news and or the news from what was it, the Fed that was speaking yesterday. I don't really take too much notice of the narratives because I do believe that it's all in the charts to begin with anyway. So we was expecting the move down before the Fed came out and spoke. People will then blame it on the Fed, and then when we get the move to the upside, people will search for narratives as to why price is going up or down, and that's what people always do. So here we do like to stick to the charts. I think it just gives a lot better analysis, and we can stay calm, unemotional, and just keep playing the game how we are playing the game at the minute. Just moving over to Ethereum now, you can see on the weekly time frame on the RSI, we don't really have much bullish divergence at the minute, but to be honest, Ethereum is setting up really nicely to come in and take some of this liquidity as Bitcoin hopefully gets that move down and we come in and take a couple of these wicks, perhaps even test the low and come below the low and then move back to the upside, because I think for Ethereum, probably in for a bit of a Bitcoin season. I think Bitcoin dominance is going up recently, and if Bitcoin is going to start moving to the upside, seeking a bit of liquidity and taking a bit of liquidity back from the market, I think we could be in for a bit of a Bitcoin season where Bitcoin makes the moves. Perhaps altcoins do make the moves as well, but maybe Bitcoin takes the lead and then the rotational aspect into the market comes into play where the liquidity seeks and moves from Bitcoin to Ethereum and then to the rest of the market. And that's just an idea at the minute, but you can see with Ethereum, a nice break of the low, come in and get some bullish divergence would be great. Obviously everyone would panic as we take the low, but we'll stay analysing these charts. That's not straight, but you guys get the idea. And I think that will do for today because it's just a quick market update, going through a couple of things that was outlining yesterday in the previous videos, remaining calm. And you guys know it's not financial advice. Not going to give that. I'm not a financial advisor. But for anyone who's found this useful, give it a like, comment, subscribe. You know the drill. Cheers, guys, and I will see you next time.